a couple of minutes and we'll get started. And I'll probably change up the order of things a little bit from the slides, but I figured I'll give a very quick market update just so everybody knows what's going on out there. And then we'll get right to Midge so she can answer a lot of the questions regarding 203K and the other renovation options that are out there in the market right now, which I think could be beneficial, especially with people having so much trouble getting houses. Guys, we'll be monitoring the chat too, so if there's anyone that has questions, just like in past lunch and learns we've done, just go to the chat, ask the question, and we'll try to answer every single thing as soon as possible. Feel free, if you have to jump in, you can jump into. I'm sure Midge has done many of these. She's an expert when it comes to these things, so she'll know everything. So it's 11:30. We'll get going right now. So hey everyone. We are doing I think this is our third or fourth lunch and learn that we've done. So today's feature is going to be regarding renovation loans. Everybody's, I'm sure, heard of 203K, heard of home style maybe. But today we're going to get a lot of the details on it from a true expert, Midge VanDalinda, who basically we refer all of our 203Ks to in our office and have never had an issue with. So Mike, if you want to move some of the slides over, we'll kind of do a quick intro. We'll talk about some of the possibilities of what can be done, how renovation loans can get your offer accepted, and how these types of loans could potentially earn you a commission check when you might think that you have a dead deal. So that's really helpful stuff. Midge has been in the mortgage industry about as long as I have, about 25 years. She's our #1 loan officer in the company for renovation loans, and enjoys cooking. Nice, Midge. That's what I like to hear. And she does love renovation. She does know everything about it. We call on her all the time for questions and things like that. And it's just great because the process is different. So it certainly helps out. And, that's huge. Everyone, I think, mostly knows, me, but maybe not know Mike. Michael Kelly's on the call here. He's been in business for over 10 years. You can see some of his cool hobbies, experiences. He actually joined our team. I'll talk about the business part of it. He joined our team in the beginning of the year, came over from NJ Lenders, where he was supporting one of their top loan officers, and he's come on to be our production/sales manager. It's been a huge help being able to come on the teams because there's so much more difficulty now in the loans that you need an extra set of eyes on almost everything to make sure things go smoothly. And that's exactly what he's provided. We figured out some new programs that we could do. You need to be creative right now, and he's been a huge part of that. Myself, I'm Baret. I'm the leader of the Kechian team. I've been doing this about 25 years. We have been in Hoboken as our office, but certainly nowhere near where all our business comes from. Condo is kind of what got us started. We became experts at that, and a lot of our clients, they move all over the place. So we've probably done more suburb loans in the last 2 years than we did the previous 10, just because of all the movement that's gone around. I am a Net fan. My voice is gone from the Nets game last night, so bear with me. And so give you guys a quick market update. Rates, the last 2 days, we've gotten a little bit better, which is good. So maybe we've hit a barrier, which we're hoping. Otherwise, you're seeing numbers now that start with a 5, and that's something we haven't seen in a couple of years. So you're gonna have some buyers that have payment shock, just overall shock. Most people are getting used to it. They are seeing this is the new normal now, and adjusting maybe their price points, but they should be adjusting their price points. So if you guys have pre-approvals, even from us, we do our best to keep in touch with these clients. We tell them to let us know when offers are going in so that hopefully we can readjust their payments, but sometimes they don't. I had somebody who came out after 3 months, and literally the second time they called me after the pre-approval was to tell me they're out of attorney review. Their rate had gone up 2%, and their payment went up $450, and they couldn't afford it anymore. And they literally just wanted to back out of the deal. And it was after attorney review is when we got the call, so we never actually got to give them the heads up on it. So just if you have pre-approvals that are a couple of months old, just make sure that they're reconnecting. If it's not with us, have them reconnect with their lender, but certainly do that because so much has changed. On the positive side, any loan amount that's above like 647,000, that's considered like territory where we can use jumbo loans, are still hanging in and doing well. Like we're seeing rates of high threes on ARMs. We're seeing rates of, maybe 4.25, 4.375 for 30-year fixed. I think those are palatable from what clients are reacting to us with. They seem okay with those numbers. They're used to those numbers. They've seen those numbers back in 2019. But any of the first-time buyers that are buying in that 400, 500 FHA, I think you're seeing a little bit more payment shock there. So you might see the market shift a little bit and some of those buyers drop out. So instead of having 62 people at your open house, you might only have 30. But that's probably not the worst thing in the world right now, especially in certain markets where it might make it easier for some people to get offers accepted if they hang around. I think all of us were on a call a couple of weeks ago, and we are fully confident that we'll see a refi boom at some point in the next 16, 18 months. It might be even sooner because the increase happens so fast that maybe the recovery is going to happen a little sooner too. So could we see a little bit of a recession? Yes. Could we see rates go up a little bit more? Probably. But at some point, we also think there'll be a recovery and there'll be a happy median between where things were 2 years ago at 2.5 and where they are now at 5. I think there is a number in there that works better for the economy. I don't think either of those things are awesome. So maybe like a 4% rate or something where every person that's doing a loan now probably will end up refinancing in the next 18 months. And so we're being very cognizant of that. We're looking at ARM options, adjustable rate options, as much as possible because they are helping people keep their payments down. And I think 7 years is certainly long enough for a refi to come around. And so that's kind of been our strategy with most of our buyers. So without further ado, let's introduce Midge. Midge, if you want to unmute. So we can talk about renovation loans. For us, when we have used these as an introduction, it's usually been because the client tells us the property is so beat up that it's not livable. That's my first question to them is the property livable? If they say yes, then we find out, okay, so how much work is it going to take and do you have the money? Like if I do a 5% down conventional loan for you with a livable property, can you live with that, hold on to your money and do the renovation? Because if so, that's probably a better loan than the renovation loan. If they say no, even if you do 5%, I don't have enough money to do what I need to do, or the house is not livable, literally the email goes immediately out to Midge and we say, okay, this one's yours. And you're on. And the reason why we don't jump to the renovation loan immediately are the rates are going to be a little higher and stuff, which we'll talk about. But Midge, I'm going to let you take over from here. I'm going to mute myself, and then I'll just try to chime in, maybe to ask questions and stuff. Mike, you do the same. If you see a question on the chat, or Craig or whoever, let's jump in and we'll ask Midge so we can get those answered as the presentation's going. Midge, you're on.
Do I have control? Who's controlling the screens?
I have it right now, but you should be able to control it also.
Okay. No, I don't know how to do this. I'm sorry.
Yeah. All right, just let me know. I can move the slides for you.
All right. So nice to meet you all today, Baret. Thank you for the introduction and the invitation to join you all. I've been doing renovation loans for at least 15 years. I started my career at Wells Fargo and left Wells Fargo 5 years ago because they stopped doing renovation loans, and I'm that passionate about the program. So I found my home here at loanDepot. It's an incredible company. We do the renovation loans better than any other company I've ever worked for, and that was one other company. But I hear horror stories all day long about other lenders that don't specialize in renovation, where anybody can write a renovation loan. They've never done one, so they get one every couple of years, and it doesn't go well. They don't do the draw process in-house. It's sourced out to another company. So there's no control after it closes. That can become a nightmare for contractors getting paid. So I think that the process here is definitely, and I've spoken to lots of people, lots of recruiters about going to other companies to do renovation loans, and they don't do them as well as we do here. So I'm pretty confident in our ability to manage the whole process from application to the project's completion. So that being said, what exactly can you do with a renovation loan? The possibilities are pretty much endless. You can do anything from a simple cosmetic update, appliance, new appliances and refinishing floors, to adding a level, bumping out, putting an addition on. If you've got room and you don't have a garage, you can build a garage. There's so many different things that can be done with the renovation loan. You can switch the screen, Michael. Michael, just tell me how to do it and I'll flip the screens. The next few pictures are just a bunch of pictures of before and afters. And I don't know if we can see what the actual before looked like in most of them, but this one's a great one. The
Do you have an
before
idea How
picture.
much like roughly you need in funds?
So if you click the back and forward buttons on the keyboard, like the
Oh.
arrows, it should move the slides for you.
It's not.
No, okay. Then here we go. I'll just do it
Control
with you.
your screen,
Okay,
but
no problem.
I don't know.
I'll just do it with you.
Okay, thank you. So these
no problem.
pictures are
So,
just kind of
the
examples
only
of
option
the
I
different
have
work that can
for
be
that type
done
of loan
with a
is, like,
renovation
you have a
loan.
department that does construction
You're going a
loans,
little too fast.
But the way they would have to do it, like, you'd have to refinance your entire loan. The rate would be higher.
So this is
I don't think that's a
this
good
picture,
idea.
this before and after
Because it's gonna-
photo is
it's gonna
basically
increase your rate.
a ton of paneling, an old,
That loan is a little more
kind of
costly. It's
sectioned
like
off
'cause it's a
kitchen. They opened up the
renovation
wall,
loan.
made it nice and
So
modern, kept
I
the
don't think that's the
fireplace.
best-
It looks beautiful. Go to the next. This is a listing in another market. I want to say it's South Jersey. And they actually, in their listing, indicated that the property would have to be either cash or 203K. So you can add this to your multiple listing, to your when you're putting a house on the market, you can say in the listing that it has to be, that it's being sold as is. It has to be either a cash offer or renovation loan. And that's just what this example shows. You can move on. That's just pictures of the interior of that house. So this is, I don't think there are after pictures of this particular property, but this is the kind of stuff that you can, do away with. You can totally gut that bathroom, make that attic dormer, those, blow up those ceilings and make the house bigger. Go on. So I think I kind of already said this, but with the renovation loan, a borrower can purchase a home in any condition and do required repairs, which would be items needed for health and safety purposes, or any optional improvements. It doesn't have to be a gut job. It doesn't have to be something that needs a ton of work. It doesn't have to be something that, has health and safety issues. The house can be in perfect condition, but there's just something about it that the buyer doesn't like. Maybe they want to add a half bathroom somewhere, or maybe they need to add a bedroom or reconfigure a kitchen. Anything is pretty much possible with the renovation loan program. The cool thing about it is nothing has to be done prior to closing. All of the work is done after closing. Next. When you write the purchase agreement, it's actually very, very simple. The only thing that you need to state in the contract is in the terms of the financing, whether it's going to be a 203K, a conventional renovation loan, or a VA renovation loan. You don't have to worry about how much the renovation costs are going to be. You don't have to worry about what the loan amount is going to be. You just write it like you normally would if it's a $500,000 purchase price. With 5% down, it's $25,000 down and a $475 loan amount. But in the body of the contract where you mention the financing terms, you just have to specifically state so that everybody knows the buyer is applying for renovation financing. Next. The contractor is selected by the buyer. So there is no list of approved contractors that they have to select from. It's up to the customer to find the contractor that they want to work with. They can hire up to 3 contractors for one project. It's definitely easier if they have one general contractor, just because chasing 3 contractors around for validation documents, licenses, insurance, everything that we need from them becomes cumbersome and time consuming. So one contractor is preferred, but they can hire up to 3 and pretty much act as their own GC. There is self-help available. Options for self-help are available with certain restrictions. They have to be, the buyer would have to be a licensed contractor, and they would have to demonstrate that they have the time and the talent and the ability to do the work that has to be done, and it doesn't affect their livelihood. You know, if they've got a license, but they're a full-time computer programmer or whatever, it's probably not going to work. We don't want them doing the work on evenings and weekends and dragging it out for a year and a half. It's got to be done within a certain amount of time, because the loan is based on a house that doesn't exist right now. So we've got to make sure that house gets done.
And
Next.
Midge, if I can just jump in for 10 seconds,
Sure.
would you say like this contractor part is probably the main reason why renovation loans have the reputations of taking longer and being more difficult?
Yes,
Yep.
absolutely. Absolutely. Finding a contractor, especially in this market, in this environment, they're all very busy. I mean, it's hard enough finding a good a contractor to begin with, but finding one in this market has been even more complicated. But I have some solutions for that too.
Cool. Could you speak to what an
they
agent
know-
might be able to do, like on this call, that might help that process along on a deal, like either recommend a contractor or somebody that they know that-
Absolutely. Yep, absolutely. So, you know, if you've got friends, family, people that you know that have recently had work done, you just have to make sure that the contractor is licensed, and we'll take care of that. But that's one thing that you can do, or your client can do, before you even bring a contractor into it. It's just, there's a website, you can go online, the state of New Jersey. It's pretty simple to navigate. You just log in, type in their name. If you have their home improvement contractor license number, type that in, and it'll validate whether or not their license is active. If it's not active, in most cases, it's easily reactivated. It's just that they've let it fall to the wayside and forgotten to update it, and they just need to get like updated insurance or something to the state of New Jersey. It can take a couple of weeks, so the sooner that's the first thing I look at when I get a client and they have a contractor in mind. The very first thing I do is look up to see whether or not that license is active. If it's not, then we have to make sure that they activate it or find another contractor.
Someone just asked a question. I answered it, and I think I'm right on this, but I think they have 6 months technically to do the work, right? 180 days?
Yes.
Okay.
Yep. Yeah. So the contractor requirements are, you know, pretty basic. We want them to be licensed. We want them to have sufficient liability insurance, and they need to provide us with references so we can do a background check. And that's it. Next. The appraisal, before we can order the appraisal, we need to have a scope of work. We need to understand what's being done. So we need an estimate from the contractor or an estimate from a consultant, a third-party consultant who's working on the project. We can't have an appraisal completed without this information, because we need to know our appraisals being done based on those improvements being made. So it's very important. It's critical, in fact, to have the scope of work. We can't order an appraisal without it, because we won't have any idea what they're doing. The appraiser won't have any idea how to assess the value of the property. I think I pretty much said everything that's on this slide, so we can go to the next one. There are different types of renovation loans. It's not just the 203K. And a lot of people think that the only renovation loan out there is the 203K, or they just lump everything into the term 203K. It's like Kleenex for tissues or Xerox for copiers. You know, they're not all the same. So FHA 203K is just one of the renovation loan programs that we offer in our suite of renovation loans. The 203K loan is perfect for property, you know, where you've got a client purchasing a home, they're putting a minimum down payment. It could be a single family to a 4-family with 3.5% down. Single family, multifamily, mixed use, which is very cool. You can't buy a property that's mixed use with any other type of financing in most cases, but you can with the 203K. You can purchase a home. It can be like a deli on the first level and apartments on the upper level. And you can use the renovation loan to purchase and renovate just the residential space. You can't renovate the commercial space, but you can purchase a mixed use property using a 203K loan. And even manufactured housing. Manufactured housing is modular homes that are built in a factory environment, not a mobile home. Manufactured housing, they're different. Next. VA renovation. This is our second renovation loan program. This is my favorite renovation loan program because it offers veterans the ability to purchase a home using their VA entitlement, purchase and finance 100% of the purchase amount and the renovation amount. So it's not just, you know, I don't know if you're aware, but veterans that are eligible for VA financing can finance up to 100% of the purchase of the home. With the VA renovation loan, they can finance up to 100% of the purchase and the repairs on top of it. There's no limit on the repairs that can be done. Other lenders that offer the VA renovation loan do have a cap at $35,000 and don't allow any structural repairs, but loanDepot has the program set up so that our veterans can use the program to make the home accessible if necessary, add space for growing families, whatever they need to do. And it's financed up to 100% with no PMI. I mean, there's not a lot of ways that I can give back, but I feel like this is one of those little things that makes me happy when I get to work with a veteran that's using a renovation loan. And
If I could say one thing on that, Midge, like,
yes,
we all know how hard it is to get offers accepted with VA, obviously, you know, on regular homes, but maybe on a home that requires renovation where it's going to be a renovation loan anyway, they might just be okay with a VA renovation loan since it's a rental loan no matter what, because the home's not livable. So in those cases, that might be our best opportunity to get a VA loan accepted. And then there was one quick question. If the contractors are licensed in Pennsylvania, can you still use them as long as they're licensed, or do they have to be licensed in Jersey in order for this to work on a Jersey property?
they have to be licensed in the state where the work is being done.
Thank
So
you.
it's not that difficult though. If they've got, I mean, I know I've had contractors licensed in Jersey pay $50 to Pennsylvania, provide a copy of their insurance and have a license online that minute. So Jersey takes a little bit longer, but it's, you know, it's not a difficult process if they've already got a license somewhere else.
And then Raph had a question, since he was saying, like, how often is the VA rental loan used in New Jersey? Like, have you done many in the past, say, 2 years, or like during
Yeah,
COVID?
I have actually.
Cool.
I've done a few. There was Belleville, Newark. We do a few of them.
Cool.
I mean,
And then,
we don't have, you know, there aren't as many veterans out there buying houses as there are, I don't know what the term is, lay people, but
yeah,
you know, what I will say, Barrett, to add to your comment about the VA renovation loan is, you know, if people are afraid to accept offers on VA loans, there's no down payment. The appraisers can be a little, you know, the quirkier than FHA appraisers, but what you can do is just offer it as a VA renovation loan and say, hey, we're just going to paint or something silly. You know, that if it comes back, if the appraiser comes back and says, oh, we need this repaired, we need that repaired, then we can flip it to a VA renovation loan. That's an option too, to save that deal. I mean, I don't know. I would encourage people to accept offers from veterans, but that's me.
two other quick things. Does the home have to be primary, or can an investor use this type of loan? I think that the answer to that is home style, right? Like, you can use home style
Correct.
for an investment, one family, or can you go up to 4 family now?
One family. So the 2 programs that we've discussed so far have to be owner occupied. Owner occupied, 1 to 4 family, but they have to, the FHA 203K and the VA renovation have to be owner occupied.
You'll go on to the next one. When you go over home style, we'll talk about investment there too.
Exactly. And I think
And then-
that might be next.
And then is there a $30,000 limit on work, and can it be applied to structural issues?
There is no limit on the work that can be done on any of the renovation loan programs. The 203K has 2 levels of renovation. So you've got the limited, which is a max renovation budget of $35,000 and no structural work can be done. The difference between that and the standard, which is anything over 35,000 and can include structural work, is the way the contractor is paid. On the limited, they're paid in 2 installments, one right after closing and one when the work is done. And then the standard would be the larger project. They're paid in installments as work is completed. So that's a little different. And then the other big difference is that you've got a third-party consultant involved on the standard, where you don't need that third party on the limited. Not that it makes much of a difference. I like having a consultant involved on the project, but you know, if you're pretty sure that the house is in good shape and our contractor's covered pretty much everything that's going to need to be done in the bid, as long as we're not going to exceed that $35,000, you can stay as a limited. But you're not stuck in that $35,000 bucket. Does that answer that? Okay.
Okay.
The third renovation loan program that's available is the Fannie Mae Home Style, and that's our conventional renovation loan. That is available for purchasing homes where people are going to occupy, or we can also use this one for a second home or for investment properties. They can get in with as little as 5% down on an owner-occupied single-family home. If they're first-time buyers, they may qualify for 3% down. If they're purchasing a second home, maybe down the shore, they can put as little as 10% down. And then if they are purchasing an investment property, this is the program where they can purchase an investment property using a renovation loan. Right now, we're limited to single family. There was some talk about adding a 2 to 4 investor to our suite of renovation products. That was being discussed prior to COVID, and it kind of was put, you know, they put the brakes on everything when we were locked down. So I haven't heard that that's on the list of things in discussion, but I'm hoping, I mean, in our area, that would be huge, you know, in this market in the Northeast. Can't read the questions in the chat that are popping up, but somebody's following those for me, right?
I'm following the chat, so I'll ask you as something, you know,
Okay.
for you. Don't worry.
All right, thanks. Next, please. The benefits to you. Well, it opens up so many of your buyers, you know, it gives your buyers so much more opportunity and ability to look at homes that may not be, they might be looking for something that's move-in ready. So maybe instead of move-in ready, we start thinking about something that needs a little work. This scenario that's on the screen right now was where an FHA loan was being in process, and the appraisal came back and appraiser called for some repairs. One unique thing about the FHA 203K and just the FHA 203K is that as soon as the appraisal comes back and it says subject to any repairs, I can use 110% of that of that value. So this scenario is 250,000. So this property came back with a value of 250 and it was subject to some repairs. So right out of the gate, I know I have a 275 value that I can work with, and I can add about $25,000 in repairs to this scenario to fix whatever paint chips that the appraiser decided to call out. That scenario, adding 25,000 to the acquisition only increases the down payment by about $875. So it's really not a lot at all. Next. This scenario would be another non-renovation to renovation scenario. Click. I can't read the chat. Oh, this is a house that one of our associates up in Massachusetts, it was a multifamily home. And I think if you go to the next screen, it'll tell us what the problem was. I think it needed an oil tank. Yeah. So this is an example of the FHA 203K in action. The purchase price is $370. The value is $370, subject to removing an oil tank. So right out of the gate, I can add 10% on top of that $370. So now the value I have to work with is $407, and we've got the room. If, you know, the sellers and the buyers aren't negotiating something else with the oil tank, we've got some money to remove that tank after closing. Next. This was a scenario right here in New Jersey. Beautiful home in great condition, recently renovated, absolutely gorgeous. Appraisal comes back on the next screen a little bit low. And it was subject to, they were doing some repairs already, I think. And so the price is $520. They were doing some renovations for about $90. the total acquisition in this case, this is what we call the purchase price plus the renovation budget is called the acquisition cost. And that number here is 610,603. The value came in at 600. So you see that sometimes, you know, when you're purchasing a home and you're doing a renovation, the buyers might be adding a little bit more to the improvements than they're getting dollar for dollar in the value. And that's okay with FHA 203K. They'll give us that extra 10% so that if you're going a little overboard on the appliance package, it's not a problem. So in this scenario, the house appraised for 600 when the acquisition cost was 610, but it's okay because we can go up to 660 in this scenario.
That's probably one of the coolest things I've seen on it. That's like, you know, kind of awesome because you can't possibly know what the value is going to go up by. People want to do their basements, and on an appraisal, a basement, for example, doesn't get full
Right.
credit, even though it may be worth a lot to a buyer. So like, that's an awesome thing for FHA to give that extra 10%. You're gonna have very few appraisal issues afterwards. That actually like
Exactly.
great selling point.
Yes, and it's just FHA though. That's just the 203K. Next, please. It gives you the competitive edge. Your buyers, I always tell people, you can buy the crummiest house on the best street. You know, people are looking for a neighborhood. They want to be in a certain town, in a certain school district, and they may not find that perfect house in, you know, in that area. So, you know, this helps them get into, you know, maybe buy a smaller home and be able to add on to it. The pre-approvals, the way we prepare the pre-approvals is Baret will do a pre-approval for a max amount, and then they kind of have to back into that number when looking at a house that needs some renovation. So if they've been pre-approved for say 500,000, we're not going to be able to add $100,000 on top of that for renovation. So if they see something for 400 though, and they want to maybe do some repairs, they know they have about $100,000 in improvements that they can work into that. Next. Myths versus facts. This is always fun. Process takes longer than regular closings. In some cases, that's true. I find that, you know, it really matters. It really comes down to who you're working with and how well they know the process, because there are very specific things that need to happen in order so that it doesn't take longer than a regular closing. I've closed renovation loans in as little as 3 weeks. So, you know, they don't have to take 6 months to close. I ask for 60 days in a contract. If you push back and you say it's going to get us the deal if we write it in 30, we can make it happen. Our biggest wild card is the contractor, finding a contractor. You know, that's really what takes us the longest. If somebody's got a contractor in mind though, we can get it done. You're required to pick from a list of approved contractors. That's absolutely not the case. You can pick, there's no HUD approved list of contractors. It's up to the borrower to decide who they want to work with. As long as we can validate them, license, insurance, and backgrounds, they can use anybody they want to use.
Midge, are there contractors that, like, I know we don't want to necessarily recommend anyone technically because, like, God forbid he does something bad and like we're involved in it, but like, is there a list of contractors that have worked with 203K or worked with HUD that a client can look at, so at least they know how the process works?
Well, there's not an official list, but there are companies out there that will certify 203K contractors, and you can find that stuff online. Angie's List or I mean, just Googling renovation loan contractors or 203K contractors will find you a list of contractors. Short list, unfortunately, there aren't a ton of them that go on there. But
when
you know,
you say certify in quotes, what does that mean?
when I say what?
You said certified, but with the air quotes. So do they have to be certified in some way or like to do this, or they just have to meet these criteria of having a license and, you know, like that? So
the air quotes was because there are companies out in that are, you know, around that will bring a group of contractors in, have them sit down, put them through a class, a course, and then give them a certificate that says they are 203K certified. That's great, but there's no such designation that's, you know, recognized by FHA or Fannie Mae. So that's just some private agency that decided that they want to certify, you know, provide a certificate of, you know, 203K. So it's if you find somebody that's been through that, then they are more familiar. They should be more familiar with the process and should be easier for them to work with it. But it's, you know, it's not a designation that's recognized by any of the investors. So
And then-
that's what air quotes meant.
As you go through, can you like give us an idea, like, so let's say it's a full renovation, because you already explained how the 35,000 and below works. It's one in the beginning and one at the end. How does
Yep.
it go when you're borrowing $200,000 and it's major work, structural, potentially oil tank or whatever? Like,
Yeah.
how do the draws work on that one?
So it depends. It depends on whether it's a conventional renovation or a 203K renovation. For a conventional renovation, we can release a material draw of either 50% of the material, or rather $50,000, up to $50,000 of the material cost right after closing. So if they're, you know, they're doing a $200,000 project, that 50,000 might not cover a ton of the materials, but it'll give them something to get started with. So after that material release, then they've got to actually physically do some work and have the inspector come out, inspect it to get reimbursed for that. Or if they purchase additional supplies, they can get reimbursed for purchasing those additional supplies. The other thing that they can do is we can pay the supplier directly. So if they provide us with an invoice from, say, Home Depot or Lowe's, we can pay them directly. So, you know, the contractors do have to do some work. They may have to put some of their own money out, which is why some of them don't like the program. But my you know, when I get that, when I hear that from a contractor, I just go back and I say, look, we have the money sitting in an account. You're going to get paid. It's not, there's no way you're not going to get paid if you do the work that you've said you're going to do, because we're holding the funds. They can't get a, you know, buyer's car can't break down and they have to buy a new car. So now they don't have the money to pay you. I know somebody right now who's in the middle of a renovation project, someone that I know personally, not, you know, who just doesn't have the money to pay his contractor because he had to go on vacation. Like people just do things and the poor contractor gets the, you know, the raw end of the stick sometimes. So they're not always open to this type of program, or not always open to this type of financing. But I tell them, you will get paid. The money is held in escrow and the borrower can't go off and use it for something else. You're guaranteed payment.
I think I'm right on this when I write this, but I don't think there's any list of VA approved contractors, right? Same deal there. It's got to be just a New Jersey licensed contractor, and they go through the whole process of, you know, sending us the license and all that information.
Yes. So with VA, there is an additional step. They have to get a VA ID. So it's just you know, it can be any contractor, but we validate them, and the VA has to also give them an ID, identification number. But it's pretty much the same requirement: license, insurance,
Cool.
and a couple of references. With the 203K, so I discussed the home style options with the material draw. With the 203K standard, which is over 35, there is not a material draw after closing. So the contractor has to either start work, buy materials and get reimbursed for them, or have us pay the suppliers directly so that they can order the materials and then get started on the project. But, you know, it's just a way to keep things moving and to not hand off a big chunk of money and have them go finish another project. Our project has to be done in a certain amount of time, and we have to make sure that it gets done.
You know how long that VA process is for getting the VA ID approximately? Have you seen it?
How long?
How long? Yeah.
A couple days.
Okay.
VA is incredible to work with. I can't believe how easy the VA administration is to work with. And then another myth is that it has to be an FHA with, I think I kind of dispelled at the beginning. They're not all 203Ks. That, you know, renovation loans don't have to be 203Ks. There are conventional options that might be more appealing.
So it's I'm sorry that
That's okay.
I'll put it in the chat. Go ahead.
That's fine. So the facts about renovation financing is you can buy a home in any condition and finance the cost of repairs, making it livable, or, you know, if it's just cosmetic. How many times do you have a client walk into a house and I watch this on HGTV all the time. It drives me crazy. Oh, the color in here. Oh, I don't like these appliances. I'm like, you can so easily fix that. So, there's always a but. People will walk into a house and they like everything about it. They like the neighborhood, they like the location, they like the street it's on. It's got enough bedrooms, but they don't like this bathroom, or but they don't like the kitchen. The kitchen's dated or the bathrooms are dated. This is an easy fix. We can easily correct that for them. Diamond in the rough. Kim came up with that. I love it. That's perfect. Yeah, you can take a house that is, again, the worst house on the best street and customize it, make it your own. That's my favorite part about this program, is that you're making it your own. You're customizing it. You're designing your kitchen. You're not buying a house with a kitchen that some builder decided, gray and white was the new trend. So this is what every kitchen that I walk into looks like these days. Conversions are huge too. Multifamily to single families, or vice versa. I've had people purchase huge homes, like big estates, and convert them from a single family to a 2 or 3 family. And then the coolest thing about the renovation loan program and the way and why it works is because we do the loan. The loan is done based on the future value of the property. So if you're buying the house and you're going to plan on taking a home equity loan after you close to do some repairs and you put 5% down, there's not going to be room for any equity in that house right away. So the renovation loan allows you to tap into future equity based on work that's going to be done.
Yep, so 2 things, Midge.
Yeah.
One, I mean, obviously, like, it's very difficult to get offers accepted as is. So then throwing a renovation loan for a home where it's cosmetic or something may not be the easiest in this market. But the client can also just buy the home, and then when they have all their contract stuff in order, they can always refinance it into a renovation loan, do their renovation, and then once it's done and the house is worth more, they can always refi it back. So it's not like,
Absolutely.
so they could buy it with a regular mortgage because it's livable, just to get in, and obviously it's going to be hard. And then 6 months later, maybe, or 4 months later, whatever, do the renovation loan once they have all their ducks in a row if they don't have their contractors yet. And then here's the big question, the $1 million question: how much different are the rates versus like our conventional loans? Let's just say our conventional 30-year fixed today is at 5%. What's a home style conventional loan today? Maybe 5.5, 5.75.
Yeah, it's usually about a half to 3/4.
Okay.
75 basis points higher is the rule of thumb.
And same FHA, like if FHA is sitting at 4 7/8 or something, maybe mid 5s, something like that.
Exactly.
Yeah, I mean,
Yep.
these loans are definitely riskier for lenders. It's riskier for HUD. I mean, you're basically lending more than what somebody's paying for the home. And I mean, even though the money is there and everything, it's still, you can see why. The good news is these are very short-term loans most of the time. I'm sure Midge will tell you too. Like, we've sent Midge clients, they've done their work. 8 months later, I'm getting an email from her and saying, hey, this is ready for a conventional refi. And she's
Right.
great because she sends them back to us, obviously, which is why we always send them to her. So, 6 months, 8 months later, as long as rates cooperate, they're back into a regular loan. And no better time to do it now. You're already paying a high interest rate now anyway, where the market is. So, 8 months, 10 months, you'd probably be refinancing anyway. So it's a perfect time to do that renovation. And if you have clients that, maybe aren't going to buy something, and you just want to be a good person and say, hey, I want to recommend something they could do, they really should renovate and maybe put an addition. They could refi into it, 203K or home style, put their renovation in, and you become the good person that gave them that great advice. And hopefully when they go to sell that house in the future, they still call on you. So that's kind of my 2 cents on that. Have timelines been taken into consideration since materials and supplies take longer right now? So like, let's say, 6 months, is there any extension to that? How does that work? Just because
Yeah.
there's a supply chain issue.
Yeah, so 6 months is the guideline, because we have to put a date. We have to set some parameters. We can't just let it go on indefinitely. We have to sell the loans to the investor. We have to deliver them at some point. So the work has to get done. We do grant extensions. I mean, with COVID and everything else going on, I've had extensions a year and a half. We don't love to do that. We don't like to do it at all, but if it has to be done, it has to be done. We just don't want to see that nothing is happening for periods of time. Work should start within 30 days of closing, and we don't want to see anything longer than a 30-day stop. So as long as work is being done and if the contractor is having trouble getting permits or if they're having trouble getting materials, that's all understandable. The other thing with that question that you just asked, Barrett, leads me to another thing. With every single renovation loan budget, we have to add a contingency on top of it. It's a minimum of 10% on top of the renovation loan budget. It's usually 10 to 20%. And we've been going with 15% as a standard just because of everything going on with the cost of materials. I've seen contracts come over from contractors that say that, this bid is good for, until the prices go up again. Like they're just no idea what the cost of materials is doing and how much it's going to be when the project actually starts. So at a minimum, we have a 10% contingency added to every single renovation budget. So on $100,000, we're adding at least 10,000. In most cases, it's 15, and we can go up to 20. So it just depends on the condition of the property. That contingency is there for unforeseen expenses. So if you open up a wall and you find that it's infested with termites or something that you didn't know were there, now you've got the money that you need to buy that additional material to repair that. It's also used for, cost overruns. If materials become more expensive, it can be used for that as well. And then if there's anything left in that contingency fund when the project is near completion, you may be even able to reallocate some of it to make some upgrades. Maybe you bought a lesser grade of granite because you were trying to keep within a budget, and now you can get the granite that you really wanted or whatever material you're interested in. So, I think that's it. If there are any other questions?
Yeah, guys, I know everybody's been asking stuff throughout, so feel free now if you want to jump in. If you want to keep going through the chat, I'm following it for sure. The contract that the homeowner is entering into with the contractor, that is them entering into it. It's not the lender entering into it. That's still their contractor or whatever. We just hold the money and pay them, right, in installments?
Yes.
Yeah.
Yes.
Yeah, we have nothing to do with that. Yeah, any question at this point? I'll say any questions on anything mortgage related, because we can all chime in. So if it's regarding to a 3K renovation, unmute yourself and ask. And then if it's anything about anything else to do with the market, ask. Our goal is to, hopefully get everybody out of here by 12:30 at the latest, keep it to a total of an hour.
Barrett, I have one more thing to add before I
Of
take
course.
questions. I can't believe I forgot this because this is I've been waiting for this to bring this on at the end, but I had mentioned in the beginning when we were talking about finding contractors that I was going to bring up a solution or
Yes.
solution to part of that problem. So loanDepot has recently collaborated with Lowe's, and we are right in the middle of a pilot program with Lowe's right now. So for a conventional home style program, as long as it's within Lowe's scope of work, we're not talking like additions and things like that, but anything that you could go to Lowe's to have done, kitchen updates, bathroom updates, floors redone, that kind of stuff, we can go to Lowe's and have Lowe's act as the contractor on the Fannie Mae home style. And there's no limit on the cost. So if you want to do an $80,000 kitchen, do an $80,000 kitchen. But I'm pretty excited about it. I think it's going to really simplify a lot for people that are trying to find a contractor to do these kinds of projects that, the big box stores can do.
Can you give a quick review and a snapshot, like the pros and cons of a renovation loan? Like what would you say are the pros? I mean, the pros I think we've talked about for the most part, right? Like somebody can basically buy a home that can't be lived in right now and still get a mortgage on it. What would you say are the cons of a renovation loan? I know you love them, but give us give them
well, I'm realistic too.
Right.
So there are cons. I mean, the interest rate is a big con. It's going to be higher, but at the end of the day, it's a tool. It's a tool that you're using to get into the house, do the work that you want to have done with money that you don't have to do it. So, and when it's all said and done, we have a lifetime guarantee for refinances. So when the work is done, you just refinance out of that higher rate. So while it's initially a con, I don't think it's a deal breaker. The contractor piece, that's probably one of the bigger cons too, because it's difficult finding a contractor, especially in this environment. you can't do the work yourself. It's not a DIY loan program. You know, we're not giving you $50,000 for you and your husband to work on the kitchens on weekends. You know, it's got to be done by a licensed contractor. I don't know, other cons, the
And
timing.
I think from my point of view, like just from what we see, like in our world, is I think, you know, people are like the rate, the additional cost, the additional time it might take, the difficulty of getting an offer accepted at times. But if the property to me is not livable, or you get an appraisal in the middle where something comes up that's drastic that can't be closed as an as-is condition, I mean,
Right.
that's a great option to close that deal. You know, you can literally just flip it, you know, from one to
Exactly.
the other. Maybe you go to the seller at that point and say, hey, seller, like your house doesn't appraise. So either we're going to walk away from this deal, or you're giving me a credit to keep the rate the same on a renovation loan, and I'll do the renovation loan or something along those lines, especially if it's mid sale and something comes up unexpected. I think
Mhm.
it's, you know, I think it's kind of cool there in that sense. And to, you know, and it's going to be refinanced, you know, 6 months later, you're going to have a house that's worth a lot more, because sometimes you might have $100,000 of renovation, but it might increase the value like 200,000 too, just like it goes the opposite way. So to me, I think
Right.
it's a good option that you know, one can use. Do you find that when a contractor is somebody who does renovation loans, do you find that they generally charge more because they're doing that, because they might have to lay out their own money sometimes, or?
Some of them do, yeah, they may, because they're going to be paying interest on, you know, purchasing materials and financing it. So they may. But I mean, you're going to either come up with the cash to pay them directly or take the higher price, you know?
Right. Yep.
You have
And
to
I
kind
think,
of look at
and
what
I
makes
think
the most sense.
our lock and shop program that we have, which is where you can lock a property even though you haven't found it yet for 90 days, I think it works for renovation too. No,
I think so. I want to confirm that though.
it's part of our conventional and FHA, so I would think so. I'll confirm that and kind of send a note to everyone.
I don't
The
see
lock
why
and
it
shop
wouldn't.
program is, I know we talked about it in one of the last ones in case you weren't there. We can lock your rate for up to 90 days, even if you haven't found a property. So if you're actively looking, you're out there like every weekend, every time something comes up, you can lock in a rate right now. So at least you cap your worst case scenario. And if you close on a place within 90 days, you basically will get whatever the rate is at the time. So if the rate is better, you get the better rate. If the rate is worse, you're capped because you capped it at the beginning. So it's kind of cool. It protects you both ways and at least gives you some, you know, levity in this crazy market to make sure rates don't go to 6%.
Yeah.
And because of the float down feature, you're not worried about if the rates go down. Oh, I missed out. Nope, you're going to get it. If after 90 days you don't find a property, it's only a $500 refundable deposit from the beginning. You get it right back, and we're back to square one. So it's a cool product. And also we underwrite the loan if you do this. So if you give us that $500 deposit and you're willing to do that, we'll underwrite the entire loan up front. So then therefore your client will have a true commitment letter subject to a property. And I'm fairly certain they'll do that for the renovation loans too, but we'll double check that. And you know, one other question that came in. So one of the things was, if you've owned your home for a few years and want to update the kitchen, Midge, any difference to the refinance version of the 203K or home style? Pretty similar.
No,
right?
just that it's a refinance versus a purchase.
Right.
Still looking at the future value of the property. So, you know, again, if you own the home now and you want to do 100,000 in renovations, but you don't have enough in equity to take a home equity line out to do it, or a cash out refinance to do it, renovation looks at the future value of the house. So you come to us with the plans from your contractor saying, we're doing $100,000 worth of work and we'll have the appraisal done based on the work that's being done, just like the purchase.
I mean,
Except
the cash out refi versus like a home style, the problem there is like so many people right now have like 3%, 2.8% rates. So to
Yep.
sit there and do either a cash out refi or a home style, you're going to take that 2.8% that you have and
Somewhere
literally
in the
double it
fives.
almost in some cases just to get this extra money. So it better be worth it, and it better be something that's an absolute necessity, or that you don't have enough equity to do a HELOC. Because I'd say like 9.5 out of 10 times you'd be better off doing a HELOC right now. But
Mhm.
again, if you either don't have the credit, your credit's 620, 630, you have to do this work. You do an FHA renovation. And there are some weirdos out there that have 5% still that somehow were in a
Yeah.
rock for the last 2 years that didn't refi. So if those guys are there, then they're not going to hurt their rate too much. That could be their true only option to get the money, where, you know, we'll do the renovation loan. Midge will do it, obviously. they'll get their money, they'll do the reno, and then we can refi them once they have a lot more equity right out of that FHA into a conventional. And that's a process we've used, like I said, numerous times.
Yep. Yeah, and I mean, sometimes people have been looking and looking and looking, and they can't find that house that, you know, suits their family's needs, and they decide to stay. I mean, I'm doing loans right now where people are paying in the fives to refinance out of a better rate because they need space for their family. And they know that we are likely, as you mentioned earlier, going to see a bit of a refi boom somewhere down the road. So their timing might be perfect. You know, it'll be bad that they'll have a higher rate for year, maybe a year and a half. And then when the work is done, they can refinance out of it.
Just think about all those people that can't get
five
like,
times, but
I mean, just think about all those people that can't get places because they're contingent. They can't get
Yeah.
the money or whatever. We do have a bridge loan option now that's kind of cool that lends up to 80% of their current home's value. But what if they're above 80%? Like, you know, you have so many cases where if they just can't buy a new home, this could be a solution for them to at least expand theirs. And again, it makes you guys the hero if that's the case, to recommend that, knowing that you're not necessarily getting a commission out of it, but they become hopefully clients for life. And then when they do eventually upgrade that home, they're selling with you and hopefully they're buying with you again. It's just, you know, having another, you know, reason for somebody to come to you as opposed to just going out there.
right. And I know that's my approach. I know that's your approach, Barrett. You know, when we talk to clients, we try to determine what the best product for them is.
Yeah.
So I'm not going to sell them a renovation loan because I love renovation. If it doesn't make sense, you
right.
know, I'll tell them it doesn't make sense.
Yeah, in the last 2 weeks alone, we've probably not talked out. I mean, just went over the options and said, don't refi to probably 10 people who are just behind the times. They got busy
Yeah.
in December. They forgot. They got, you know, they had their gifts and they didn't look at it. And then all of a sudden now they're back in trying to refi and they have no idea rates have gone up 2%. And, you know, we've talked to them and said, listen, there's nothing you can do that's better. Some people have had ARM programs. I mean, you could scare them out of an ARM, but that's ridiculous. Like their ARM program is going to be way better than any rate they can get right now. So the best
Right.
thing to do if you're in a decent loan right now is just stay put. If you need money, you probably do it in a form of a home equity line of credit if you're able to, and you should do that. And then, you know, wait for the next boom to try to, you know, refi them together if that's the case. But yeah, it's almost an entirely purchase market in our world right now. I'd say, like, I'm staring at our pipeline of 142 loans. I'd say probably 135 are purchases. Maybe there's a couple of lagging refis behind. That's all we're doing right now is purchase money loans. So that's the market.
Were there any other questions?
Any other questions, guys? Otherwise, we're doing awesome on time. It's 12:26. Hopefully, anyone who registered should have received something from Uber Eats. Is Scott Rutke on the call? If so, please unmute so we can give you a shout out. Nope, he's not on the call. Well, Scott Rutke is the sponsor for the lunch. He runs an outstanding title company. Scott knows every effing thing about title you can ask for. So his information will be on the deck. If you have a question about something to do with title, this man knows it. So he's local. And I think I said it in the last meeting. He also has an awesome wine collection. So me and him get along real well. So yeah, absolutely great guy to talk to, certainly. And if you have any questions for any of us, you know, you can come to us on the initial application on a lot of these clients. We'll take a look and say, yep, this has to go renovation. And if it does, you can rest assured I'll be hooking you up with Midge on an immediate email with the client, and then she'll take over. And the same thing, like on a pre-approval, there's times when we have an application for a client and we've done a normal home, and then the deal had to go renovation. I literally just put Midge right on my application. She jumps in, she does the renovation pre-approval right away. And then if it has to be flipped back, she can just flip it right back to me. So same application, they don't have to apply twice. They don't have to run credit twice, same company. So in that sense, it works out great. And yeah, anything else we can answer, by all means, let us know.
Hey Barrett, it's Kim. Hey Midge, I just want to say thank you. And if this means a lot to everybody that knows myself and Barrett, you know how responsive Barrett and I are. Midge is the same. So if it's a weekend, you know, I'm like, Midge, I have a client. They really want to talk to someone. She picks up the phone, she answers. So thank you for that. And love having you right here in our backyard. Couldn't ask for a better team. So thank you so much for today.
Yeah, she's been an outstanding partner for us. Like, just great to have, like I said, in your bag, to be able to say, yeah, you know, people ask me all the time, do you do this? And I'm like, I don't, because I'm not an expert at it, but I have an expert that I can go to. And no one's ever had a negative thing to say, which is all I can ask for. And like I said, the responsiveness is outstanding. Thank you truly for coming on. I know it's an hour of your time, so we appreciate it greatly. And hopefully that'll lead to a lot of business going forward. And if it saves even one deal for you guys in the next 2 years, that's a $10,000-15,000 commission check that, you know, you spend an hour, and hopefully that works out. Anything we can do, like I said, to help you on a deal that's in process, that's going bad or whatever, appraisal came in, it's not a livable house, just let us know, we'll be all over it.
I saw, hey Barrett, I saw Ralph asked a great question. By the end of the day, Craig and the team will push out the recording link to the recording
Yes.
and also the deck as PDF. And then in the next day or two, our team's gonna have all the Q&As because there's a lot of great questions. We'll convert those and send out a PDF in a couple of days.
Awesome.
Great, thanks
for
everybody.
coming. Yeah, that's awesome. Awesome job. Thanks again, Midge. You're the best.
Thank you.
All
Bye,
right.
everybody.
All right.
Thanks so much. Bye.
Thank you.